afternoon to everyone. Extremely difficult challenge to bring a close to this meeting. And I was asked to say a few words in closing in only 20 minutes on how the insurance industry should face into the challenges that the market will offer in the future. And it's great to get that final challenge from Gavin there to really sort of set the stage for me in the context of positioning how we should respond to the future. And from my perspective, as we look at the challenges, I think the only one thing we can say with certainty about the market of tomorrow is that any predictions we make are almost certain to be wrong. And I think in there lies the key to some degree for the insurance industry. So I'm not going to spend time talking about predictions. I think you've had probably enough of those over the last day and a half. I would like to spend a bit of time giving some context around the forces of change that are currently in play, try and bring some of those threads together that you've talked about over the last day and a half. And then really give some personal perspectives, if you like, around where I think the insurance industry ultimately needs to focus if it's going to navigate some of the challenges, but also some of the opportunities that the next 3 to 5 years plus will actually hold for the industry. So this is one of those sort of very complex CEO slides. Just to manage expectations, it doesn't get better. But if you actually, contrast the pace of change, and we've been talking about that even in the last session, of the last 50 years with the last 10 years, it is clear that we've seen a quantum shift in the actual pace of change, quantum shift in the context of communication, the way we do business, the way we operate in our personal lives. And, if you bring it back to the youth of today, they just operate in a fundamentally different sphere, much more finite, much faster compared to, our youths, if you can think back that far. And technology, without a shadow of doubt, has been the pace setter. And we used to measure technology in terms of development in the context of Moore's law. How many transistors can you get on a microchip? And, Moore's law, computing power would double every year. And, over the last 30 or 40 years, that law is fundamentally held. But I think the difference today is technology is just so tangible. Tangible in the context of the way we see it in our businesses, and it's tangible in the way we personally feel technology in the way we manage our day-to-day lives. And, some iconic images there that take us from, past to present, the old dumb terminals of the 70s, workflow and imaging of the last decade, through to the iPads of today. We've seen the developments in mobile and handheld type technologies over that time as well. And I think we're in quite an interesting position that, if you go back 20 or 30 years, significant investment by businesses in technology, and that's where we all as personal individuals really started to see some of the technology that would ultimately influence our lives. I think we've seen a reverse of that position now, and businesses are fundamentally in catch-up, trying to catch up with the actual power of personal computing that's in our homes and is actually in our hands. And I think that's quite an interesting challenge for the insurance industry. Because I think ultimately we're still seen as very traditional, very staid industry. And the majority of our people who work for us are now using technologies that significantly lag behind what they're used to using in their everyday lives. And I think that's just another challenge for us in how we bring our people with us on the journey over the next 5 years or so. And if we look at the impact of technology just over the last 10 years or so, the consequences have clearly been profound. And if we look at it from an operating model perspective, and I can talk from personal experience, I only came back to the UK at the end of 2009. I've been out of the UK for nearly 8 years. I understood the business that I came back to. I did not recognise the operating model. And if you think about what technology has enabled in terms of consolidation, automation, outsourcing, offshoring, fundamental change. And we always talk about we'll keep the customer in efficiency and effectiveness in balance when we make change. But when you make substantive change, one of those levers always wins out. And I think this industry over the last 10 years has been absolutely focused on extracting cost. And I think it's been at the expense of the focus on customer and absolute effectiveness. And when I talk in a moment about how we prepare ourselves for the market of the future, I think that's pretty fundamental. Communication, we've all talked about social media, Facebook, Twitter. We are now seeing large communities connected real time. This is the broader populace absolutely embracing technology, and it is clearly influencing the way we're doing business, the way we market to, the way we communicate with, the way we service our customers, and we're only at the start of that journey. There's no question. Buying behaviours, look, techno-savvy consumers, we see the way they're buying. It will move through consumers to the SME market, as you heard earlier, longer to get into commercial, but it will get there. And ultimately, we're in insurance. And the risk landscape is evolving. When you have substantive change like we've seen over the last 10 years, that type of change brings both threats and it also brings opportunities. And you see it in the context of new requirements for risk coverages, non-damage business interruption in protecting the supply chain. You see it from a personal perspective in terms of propensity for identity and data theft. There's lots of questions out there around latent disease in the context of mobile technologies. And, when we're in a technology-enabled transaction, the propensity for fraud, as we've seen, is significant, be it from embellishment through to organised crime. And this list is by no means exhaustive. So, fundamental change over the last 10 years, absolutely enabled by technology. But I think we are at an inflection point, and I'm sure you would have got a sense for that over the last day and a half. And I think in many respects we've got, the perfect storm in the context of economics, political, and ultimately the regulatory environment, with still substantial changes taking place in the context of technology. Economic environment, yes, we went from the stock market crisis of 2008 to 2009. We're deep in Eurozone crisis, with contagion continuing to spread. We've got the lowest interest rates that we've seen for decades, putting pressures on margin. And at this time, when we need small businesses in the UK and across Europe to genuinely grow, to take us out of recession, we've got restricted capital flows with the banks continuing to shore up their balance sheets. And I'm sure, if I know Clem Booth, he would have looked to have put the fear of God into you as to just how that's all going to play out. And there's some real truths in there for us from an economic perspective. Political and social change, we're seeing all of this, austerity measures being driven by government, the impact that that's having. But I think what's also interesting is that at one level we're seeing a move to pan-European and global strategies to try and tackle the economic crisis. But on the other hand, we're seeing politics start to move much more to localism and protectionism. And I think those are competing forces that are in the mix as we look forward. And on top of that, we're seeing clearly an increasing unemployment. We're seeing a widening wealth divide. And I genuinely believe that we are in a period of substantial, economic recession for a long period of time. This is going to be a long recovery. That wealth divide will increase, and I think there is real propensity for social unrest. And ultimately, we then need to look to technology. Because I think the difference here is that, yes, we've got 1 million now young people unemployed. We've been in much higher levels in the past, but they were not connected by technology real time as they are today. And we saw what actually happened in the context of the London riots and the way that spread across the UK. Real-time communication accelerates failure points. We saw that also on the run on the Northern Rock Bank. And I think we just need to be alive to this is a fundamentally changing environment that we're heading into. Regulatory environment, we're all familiar with. It's getting much tougher. The FSA have made it quite clear. This is intrusive regulation. I feel it. I think we all feel it. We see the impact of Solvency II now starting to progress. It will be a significant cost to the insurance industry. Potentially long-term benefit should accrue, and we see a huge number of other changes taking place, be it the OFT motor inquiry, a focus on selling and upselling of products, high commission products. You know, this is an environment where, you know, regulation fundamentally is shifting. Naturally, with any pendulum swing, when you have points of failure, my concern is that we're moving to a position where regulation is ultimately moving to almost zero tolerance of failure. Whereas we actually need a vibrant business environment that sustains profitable growth if ultimately we are to come out of this economic recession. Again, competing forces at play, and technology will continue to develop on a whole range of fronts that we've all talked about. I think some of the ones I would actually pick out, ease of doing business will be key in the way we actually operate. Communication, the development of mobile devices, etc. And I think the one we talked about earlier, I absolutely agree with. The primary battleground will be data in the near future. And with the development of social media and other technologies, the availability of data will be much broader than we've ever seen before. Our ability to actually source that data and fundamentally new developments in data analytics will be absolutely critical to make use of that data longer term. That will be, I think, in the short term, one of the battlegrounds from a technology perspective. When you get this level of change converging, we will see market dislocation in the UK, there is no question. There will be failures and there will be survivors, and it will provide opportunity for innovation in this industry. So what does that mean for the insurance industry in preparing for that market of tomorrow? So I used a bit of a quote here from Darwin I thought summed up the position quite nicely. You know, it's not the actual strongest that ultimately will survive, neither is it necessarily the most intelligent, but it is those organisations most adaptive to change. And I think that is going to be a truism for us as we look forward. We are on the verge of substantive change, there is no question. And it will be those insurers that can read those trends and ultimately adapt that will survive. And it will be those insurers that can stay ahead of trend and innovate that will win. And I'm not talking about here innovation in the context of blue sky type thinking and big programs on how do we develop innovation. This is about ultimately reading the market, reading the trends, staying grounded, but moving ahead of trend. And that requires a fundamentally different way of operating. So where do I see the battleground in the context? Where do I see insurers having to focus over the next 3 to 5 years if it is to manage some of those challenges? 4 cornerstones. First and foremost, may seem trite, but focus on the fundamentals. You'll have heard a lot over the last day and a half around change, the quantum of change, the significance of change. The one thing that doesn't change is there's still insurance. All right? And ultimately, I look at general insurance, and it is a skills-based game, more so than ever. The way we actually go to market, the way we risk select, the way we price, the way we underwrite, the way we fulfill the promise, which is the claim service that we deliver, that is based on people. People, skills, and capabilities. And I think one of the issues for our industry, as I said, is the last 10 years we focused on removing cost. And I don't think we focused on maintaining and sustaining the capabilities that we need as an industry to navigate some of the challenges that we've got ahead of us. Building talent and capability is still fundamental to navigate what's ahead of us. Market segmentation. I'm a great believer in choose your battlegrounds. All right? Do not try and be all things to all people. Choose where you play, segment, and build deep expertise. And I think that will be fundamental in a period of change because it's those people who have expertise on very specific segments of the market that will read the trends and will have the capability to stay ahead of those trends. And I think that's a nice linkage to research and development. And this is one area where I believe that the insurance industry is absolutely woeful. All right? And if you look at the amount we invest as a percentage of revenue, You know, we're not in the game. And I'm not saying we should spend as a manufacturer does in terms of product, but we do not really invest in R&D in this industry. We have to create the capacity to think. And I think history tells us that, because if you look at any of the real innovation in our industry, it can be direct line, it can be the aggregators, they were not brought to market by present incumbents. It was always a new entrant. And that is a great example that, you know, if we are in a period of substantive change and the potential for innovation, there is a real great chance that we will be overtaken. We have to create the capacity to think. Test and learn, you heard some more about that earlier. We need to have much more of a retail mindset in the way we operate. We need to be more, we have to develop approaches in the way we test and learn. And it doesn't mean we have to do it all ourselves. This can also be, how do we create alliances? How do we do joint ventures? How do we back a venture that can run alongside our business, that can give us the opportunity to learn? We've got to find much more creative ways to stay ahead of the market changes that we're seeing. And at the end of the day, the path is not straight. So we best have some contingent options in the way we're going to actually operate. Flex, agility. And ultimately, technology will be a continuing battleground for us. And I think for the big incumbent insurers, we kind of get away from the fact that our legacy architecture is a massive inhibitor to respond to a changing environment. And we've got to get smarter. We've got to get smarter in the way we remediate our legacy. We've got to get smarter in the way we bypass our legacy. And ultimately, we do need to create the agility to stay as an industry relevant to the market of tomorrow. So for me, those are the fundamentals that have got to be in play. There's one that's missing on there, and I'm almost taking as a given, and that is financial management, because we are in a period of very substantial economic challenge, and those with the strongest balance sheets, I still believe, will be the survivors at the end of the day. But if you've got the balance sheet and you haven't got some of these fundamentals right, you may not have your balance sheet for too long either. So, to conclude and sum up, and I've got to say, when I put this deck together a couple of weeks ago, I thought this was a bloody great slide. And unfortunately, you know, we've had a couple of deaths in motorsport in the last 7 to 10 days, which puts a different colour and perspective. But at the same time, you know, the one constant is change. You know, and the pace of change in this industry is going to accelerate. We are at an inflection point. I genuinely believe the next 5 years has the potential to eclipse the last 50 in the context of change. That's the market that this insurance industry needs to ready itself for. It's going to be challenging. There's going to be opportunities. It's going to be fast. It's going to be exciting. The only thing I can say to you really is hold on to the seat of your pants, buckle up, and get ready for the ride. Thank you.
Stephen, thank you very much. Has anybody got any questions you'd like to ask? The microphone's on its way.
Stephen, great presentation, good thoughts, and you know, a day and a half in to a conference, what I'm reflecting on is just going back to your point on the operating model and how you link your strategy to customers and distribution. And I guess I'm going to go on my train back north, hence the accent, thinking about, are we structured as a business in the right way to manage the priorities, manage all of those conflicting balls that you have to juggle in the air. So my question is, do you have a view on what is right in terms of organisational structure to tick all the boxes, to line a business up, to manage that change over the next 5 years that's going to eclipse the last 50?
Whew, that's a question and a half, isn't it? If I had the answer, I'm not sure I'd give it you either. You know, for me, I'm not sure there's, you know, the 100% ideal structure at the end of the day. I think the key for me, you know, and I mentioned segmentation, I think it's got to start with the market, and you then got to work back into your business. And you need to align your business to the markets that you want to serve, first and foremost. And then, one of the critical things for me is that at one level, the developments we've seen in terms of technology have enabled organizations to almost silo their functions from a business perspective. And I think one of the dangers in that is that if you do not connect your end-to-end value chain of your business in the way you then focus to a particular market to serve it, you will fail. All right? Because it's a bit like the adage in terms of you can have the best players individually on a team, but if they don't work together, they're going to get beaten, no question. So for me, it's about choose your markets, work back from the market to your business, and make sure you orchestrate your business so that your end-to-end business operates cohesively in the way you go to market.
John Lawrence from Lawrence Somerset. You talk about segmentation and working back, and I agree with all that, but for large public companies, would you see the possibility of retrenchment and pulling, not this continual striving for growth as actually something you should sell to shareholders and could be a tenet for a successful strategy?
I think the simple answer to that is yes. I think you do need to differentiate between ultimately, are you there as a value stock or are you there as a growth stock? And clearly, growth stock, you plough all of your investment back into growing. I think there is an absolute place for a value stock. And that's not to say you don't still need growth, all right? But ultimately, it's a different return to your shareholders in that context. And I would say, I would come at it, if we look at it from an insurance industry perspective, and I look at the market we currently face, and if you just take personal lines, if we went back 6, 7 years, we'd actually say that ultimately personal lines was all about being big, scale, sausage machine, cost. I think the market dynamics we're playing with now means that even in personal lines, yes, you need a certain level of scale, but scale is not everything. You need to be absolutely selective in the way you underwrite price, the way you manage fraud, and so you've got to be absolutely focused in the way you do that, so it's not growth at all costs. And I've got to say, if I look in the commercial sector, we're writing at uneconomic levels at this moment in time. We see the pressure points that are in the mix. We see where, prior year development is as an industry. There's very little left. We see interest rates at rock bottom levels, and I still see, the industry generally pricing on past historic accounting returns. It's uneconomic, and if you want to hold profitability for your shareholders, you have to walk away from business. There is no question. Yes, you have to become better at the way you price and risk select, and at the same time, you have to have strategies that say, my purpose is to deliver value to shareholders, and that doesn't necessarily come purely based on growth.
One last question. Andy.
Yeah, hi, Andy Miller. I fear I'm going to ruin somebody's day here. Don't worry, it's not you. I keep thinking about Google acquiring Beat That Quote, and I then thought about how Microsoft killed Netscape purely because they were bigger. And if Google halved the commission that they charge compared to their aggregator competitors like GoCompare and Confused.com, they could kill them all within 6 months, and then Google becomes the only distribution channel for a comparison site for personal lines insurance with 7 products, and then therefore Google owns personal lines distribution. Please comment.
My simple answer was, if you move to that position, do they own the market? They only own the market if all insurers play. And when you move to a position where you've got one and no competition, I would say you've moved potentially the balance of power in the context that insurers can actually decide to play in a different way. So I don't think it's a straight path on this. Some of the economics you put there are quite compelling, at least in terms of the actual power of Google, but I don't think necessarily it plays out in a straight line in that way.
Great. Steve, thank you very, very much. A great end to the conference. Thank you.